Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. All right, everybody, welcome back to another live stream. I hope everyone is doing well in these crazy times we're living in. We had some good news yesterday. Markets are absolutely ripping, and it's gotta be a pain in the butt to be a bear on these markets right now. This market seems to only know how to go up recently, which is very evident of a very resilient market. What I mean by that is this market, it's hard to keep it down. Every time you get any sort of bad news, I mean, the market barely flinched on the geopolitical stuff that we saw in the last week. Like the stock market said, I don't buy it, and just went up. And then we, of course, see the announcement of the ceasefire yesterday, and up we go. We are tapping in, ladies and gentlemen, to the all-time high. I don't know about you guys, but if you had told me all the stuff that went down in the last few months, that we'd be at an all-time high, I'd say there's no way. Tariff uncertainties and geopolitical tensions and, all sorts of craziness that we're living in, right? And yet the market finds a way to march to its all-time high yet again. NASDAQ is sitting at 22,000 this morning. It's very impressive. I'm along for the ride personally. I'm long a lot of different stocks. I'm also long the Russell, which jumped here recently, and I'm still trailing my stop loss on this trade. I'm also long the DAX, which came back to life. Looked like I was going to get stopped out on this trade and now has reversed. So indices moving higher is it's definitely okay by me. Dow Jones also sitting at resistance here, but really the NASDAQ is a killer here, right? NASDAQ and S&P 500 look really strong. Just keep pushing higher and higher. And again, this is where what I think you may have seen here is the classic climbing the wall of worry. There was all these sorts of things that people were scared about and worried about in the financial markets. And yet it ultimately was an incredible buying opportunity when we saw all that craziness in April. I've seen this story play out so many times at this point in my trading career, that it almost feels too easy. However, that is the famous last words because, we know that markets aren't going to go up forever. We've lived in a stretch here that is incredible for stock markets. Like if you've in the last few years, if you have struggled to really make money in the markets, then I would just encourage you to think about what you're doing a little more closely, because here's the thing. This is for most people, this is easy mode. This is an easy mode market. Now, I know that sounds, if you've lost money, then you're like, yeah, right. It's easy. It's hard as anything. I get it. Trading is always difficult, but let me tell you that this environment for most people is much easier than this environment. This environment is devastating for people. The reason I say that is because if you're somebody who has an investment portfolio or you trade stocks or invest in stocks, this type of volatility is very hard to keep bottled up, right? When the markets are a little smoother, specifically, we could take a look at the VIX for this. When you live in a VIX world where the VIX is low, for most people, this is better. VIX up here is really difficult because, and I'm not saying for everybody, some people really love that really crazy volatility, but the very high volatility makes mistakes very painful. Like if you're, let's say you're long on something and the VIX goes crazy, you could be sitting in some really ugly situations very quickly. So trading is never easy, but as crazy as it might sound, an environment in which case you have mostly, dips being bought and stability in the markets. Now I know that's not been, recently we haven't had tons of stability, but more recently we have. The market has really been resilient, really rebounding really, really well. So if you're used to an environment, if you're struggling in this current environment, then I would encourage you to, first of all, make sure that you're not making the number one mistake that I see this year, which is letting people's politics get in the way of their trading. Right? A lot of people are like, they refuse to believe that this market's going to go up because they don't like the president, or they don't like, what's happening in the Middle East, or they don't like what's happening in Ukraine. I get it. There's all sorts of crazy stuff in this world that some people like, some people don't like. But leave that to the side for a second and just acknowledge that the markets are going to do what the markets are going to do. And they don't really, I mean, they do care about what's happening, but you have to be able to separate your political biases and things like that. And unfortunately, a lot of people were not able to do that this year. A lot of people thought that this was going to be the end of the world. And you saw posts everywhere about how people were excited the market was crashing. Same thing happened under Biden. It's weird, right? People are like, almost they would rather see their political distaste person, they'd rather see the stock market crash because their person they don't like is in the White House, than to just want the market itself to do well and prosperity regardless of who the president is. So we saw that under Biden, we saw that under Trump. It's a weird thing. I would say, in my opinion, one of the best things you could do is ignore as much as you can that noise, the news headline noise, the fear, the stuff, that propaganda that constantly gets thrown at us. As traders, you have to be able to put that to the side and just say, hey, look, this market is trending higher. We had a huge breakout as early as, late April that led to just a monumental push to the upside on indices as company earnings look really strong. The AI trade seems alive and well. Inflation's cooling off. If you were blindsided by political bias, look, you're not wrong for maybe liking or disliking a particular candidate. That's human nature to have a bias on that. That's perfectly fine. But letting that bias completely dictate whether or not you trade something a certain way is dangerous. And a lot of people make that mistake. So I know I've ranted about that many times this year, but it is something I think is really important. Yeah. So metals going down with ceasefire. Yeah, that makes sense, right? We do see gold pulling back here today. Gold and silver both pulling back here today. I do have a long position on silver, and my long position on oil also completely flopped. So I went long oil yesterday and almost immediately hit stop loss. So I went long at support here and price tanked through the lows. And so that trade did not work out. However, this was when I made the post here in the signals room. Let me show you what this looked like. I kind of mentioned this when I took the trade. I've had a lot of really big winners recently that are still running in my portfolio, right? I have a bunch of stocks that I've bought and indice trades that I'm in. So what I did is I actually bought oil as a bit of a hedge to everything that was going on the pullback. And that pullback kept pulling back. So I stopped out of my trade there on oil, but I mentioned that it was a hedge to my equities positions / geopolitical conflict / inflation concerns. Yesterday, I had a whole bunch of stuff that was up quite a bit, like my Tesla position and the Russell trade and all these things. So I actually took this as a bit of a hedge, and this trade definitely did not work out. So I stopped out right away, took a small loss on it, and moved on from the trade. But that one did not work out for me. Let me see what else we have. Dollar CAD. Let me see. My CAD trade still sitting in drawdown. So I'm looking to potentially scale in more to my CAD Swiss long position if we can get a move down to 58.50. So yeah, we'll see. What's up, Bulent? Good to see you, man. Nick, it's not right to be politically incorrect, but Powell's really starting to overdo it. I mean, it's a world we live in. The world we live in right now is just very, very politically chaotic. People like somebody, they dislike somebody. Everybody has their very strong opinions on it. All I'm trying to do as a trader is to stay level-headed and really ask the question, how does this impact markets? Not necessarily, making some sort of strong stance on everything. Nick, I'm a big follower of you, and I've trying to message you on Instagram. I'd like to have a one-on-one with you to share a strategy. I appreciate the consensus, and I mean this. I'm trying to sound as humble as I possibly can, but I literally do not have time to answer that. The number of DMs that I get, and I do genuinely wish you the best with your trading. I don't do one-on-ones just because, again, I simply don't have the time for them. If you have a strategy or you have something that you're interested in chatting about, what I would encourage you to do is consider joining our Discord and chatting with people in there. So if you want to share strategies or ideas or communicate with other traders, definitely cool to do that within the Discord. But as you can probably imagine, I know it sounds like really conceited, but I get like hundreds of DMs a day. So between everything, emails, DMs, comments on YouTube, I guess probably not 1,000, but like multiple hundreds per day. So I appreciate the consensus, but it's not personal at all. I just can't possibly dedicate time to every single person that DMs me and also do everything else that we do here. Software side, let's see where we're at. We've got NASDAQ bullish ratings. I'm still looking for those pullbacks. Not looking like I'm going to get that, which is okay. I'm very much long a collection of stocks and indices, so I'd be fine if they kept running. I took a profit yesterday on the euro dollar trade that I took. So let me pull up euro dollar really quick. You can see I'm out of euro dollar. I already took profits. It's out of the, this is our trade tracker. So this is a tool that updates, with the positions that I'm currently in, as well as Alan's trade. So you can see them here. So I have some currency drawdown, some in profit. My Kiwi yen trade doing okay. Euro pound, CAD Swiss is, like I said, still the one I'm sitting in some drawdown on. But these are very, very tiny trades. So I'm very much prepared for a bigger position if I can actually get it filled. If we get CAD Swiss moving lower. Gold looks interesting. I need to check. So gold is a bullish rating. So it's possible that we could get some entries if we pull back a little bit further. Also, thank you for dropping that, Chandler. So just a quick reminder to everybody who's here with us right now, we are doing this week only, we're doing a free Edge Finder week. So anybody who's watching that would like to try out our tools, our team is offering a free week to try out all the different software tools that we have within the Edge Finder. This includes things like our different scanners for all sorts of macroeconomic data. We also, of course, have the institutional data, so you can track commitment of traders reports to see what institutions are buying and selling. We did get some data on that yesterday that we could check out together in just a second. You could track seasonality data, so we could take a look at, for example, the historical average returns for gold over certain months. We could take a look at economic heat maps that we've built, so you can see which metrics are strong or weak for the US economy at this time. And by the way, we also have the UK, we have the EU. It's a really powerful set of tools for traders. So if that's something that you're interested in and would like to try it out, there's your chance to do so completely free this week only. You get access between today, so Tuesday, through next Monday. So it is almost a full week. It was a full week yesterday, but you've got 6 days or so to try out the tool, explore it completely for free just by using the link that we just dropped there in the chat right now. So let's see, what else do we have? Trying to get the offer for 40% off. Send us a message if you're having questions about checking out on something. If you're trying to get a membership, just shoot us a message. If we could drop the link here to the direct message center. We have a talk to, which is a chat system where you can speak directly to our support team. So let me just hold on. Here you go. So click this link if you'd like to chat directly to our support team. If you have questions about a membership or whatever, just head over to a1trading.com. and click in the bottom right hand, there's a chat with us button. Just click here, and then you can chat with us directly, or click the link that's on your screen / in the live stream chat right now. And someone from our team will help you out with that. Sorry for the confusion there. Okay, so gold is pulling back here to this 3,300 level. This is an area that I'm watching. If I take that long position, I'll share it in the VIP room. I'm watching it pretty close. So yeah. So euro dollar yesterday, I ended up taking a profit on that move. It was a really quick, turnaround. I essentially, let me show you what ended up happening. Hold on, let me see. So euro dollar yesterday, like I didn't expect it to be so quick, but it reversed course intraday. Really, really strong. So yeah, this was like euro dollar. I went long, and I wish I had more trades that looked like this, to be honest. It would be really nice. I bought, and it just immediately shot into profit. Once we tapped into some resistance, I just took profits on it. And if we can get a pullback, then I'll probably play it again if I see the right trade setup. So if we kind of swing back down here, I'll look again at the euro dollar, maybe around the 1.14 level, if we can get that pullback. He's only interested in if you buy his Edge Finder course or buy his stuff. I mean, the thing is, like, we get flooded with stuff, and to be completely honest, yeah, that is kind of the truth. If you're like a customer of ours, we do prioritize your messages and help you out with stuff. And for the rest of people who don't want to pay anything, totally cool. The videos, live streams are completely free. So it's it's one of those things. If you're a customer of our tool, we're definitely going to give you more attention and more assistance with what your questions are. What's up, Lano? Thank you very much for being a channel member. Nick, the markets have been killing me for like 2 weeks now. I'm an intraday trader because I'm trading with a prop firm. Any advice on how to keep my emotions in check? A few of those days really got me. Yeah, no, that's very understandable in terms of being frustrated, having a losing streak, going through that. It's very normal to be frustrated by it. And to be honest, with prop firms, I actually think trading on a prop firm is kind of trading in hard mode. It's not to say that prop firms are useless. They're definitely useful for traders who are like really veteran, experienced traders. Prop firms can be great. But it does, in my opinion, make trading just way harder, because the trading is already hard, but then you add like more layers and more rules to be conscious of it. It does make trading even harder in my view. In terms of keeping your emotions in check, the biggest one, the one that is most of the time the problem that traders face, myself included, like if I'm having like an issue with a trade kind of making me frustrated, wanting to revenge trade, it's likely the case that my sizing is too big, right? So if the trade is too big and it's making me think about it and I'm frustrated all the time, the biggest tip I can think about for my own, how to handle that situation is reduce the trade size, take it slow and steady, and reevaluate. Do some back testing. If you're feeling like you're off, then don't trade. Step away, do some back testing, go on a walk, do something physical. That's my way of approaching it. And yeah, I mean, it's natural to feel frustrated by trading, but if you're feeling like devastated by trading, then your size is too big, almost certainly. Losing a trade shouldn't hurt that bad. And if it does, then the trade size is probably too big. Perfectly normal is a long time considering. Yeah, I mean, if you, like I said, I think our tools are worth every penny. So I would buy them again and again because I use them every day. Let's see. What else are we looking at here this morning? So gold, I mentioned, as a possible pullback setup for me today. I'd love it to just kind of keep pushing a little bit lower here today. So what's happening with gold? Why is gold down today? Well, yesterday we had a little bit of ceasefire stuff, right? The news that, thank goodness, I think everybody, well, most people are probably happy that World War III has been canceled, that there was some sort of a ceasefire established. That's great news, right? And so what we saw in response to that is gold, which was playing the safe haven role, came tumbling down this morning. And we do see oil prices lower here today. I did stop out of my trade there on oil. This was a bit of a hedge and definitely did not work out. And I'm perfectly fine with it not working out because it was sort of like oil dropped hard and indices absolutely shot through the highs. Well, I mean, we're back to the all-time highs. This is insanely impressive in terms of the performance of the stock market in the face of all this uncertainty. To just say companies look strong and earnings reports look good. The consumer seems to be holding up okay. Inflation is cooling off. Rate cuts are coming. I mean, to me, the path of least resistance for stocks and indices is to continue to push higher. And with the situation now in the Middle East, definitely cooler now than it was to go into this week, we're looking at a situation in which case, in my view, indices have even more reason to stay strong. So gold is down, oil is down, dollar index is back down towards those lows, giving up a little bit of its risk off premium, giving back a little bit of that. And then we also see a lot of currencies kind of bouncing back against the dollar here. Here's the pound dollar. Here's the euro dollar pushing higher here this morning. The Australian dollar had one of the sharpest reversals I've seen in a minute here. Intraday, we turned around, everything kind of, everybody sort of seemingly sighing a sigh of relief, if you will. You have all sorts of moves across the currency market reflective of what took place. It seems like everything is sort of de-risking today. You have a ginormous risk-on move taking place in the last 48 hours. And again, just once again, kind of showing the resiliency of this stock market, finding the ability to just continue to rally in the face of all this uncertainty. We also had to add into this, we had several Fed officials suggesting that rate cuts are coming. And if you've been watching the channel, we've talked about this recently quite a bit. On the channel recently, I've been pointing out that I think rate cuts should be happening soon. And we now see Waller, Bowman, and I don't know how to spell this, Gunlock? Is this how you spell it? Major Fed officials, major Fed members coming out and saying the Fed should be cutting interest rates in July. So we have Powell, of course, who is, as we heard recently, much more on the hawkish side. But there's a dynamic here that I want to address, which is Waller. I don't know about the other two here, but Waller, like Powell, was actually put into their place by Trump. And so I wonder if there is a possibility that there's a play for Powell's job. So this is a little bit of drama. It's possible that some of these comments from Bowman, from Waller, are partially, and this is a big accusation that this is alleged. I've seen some claims that maybe there's a run at the job here, right? But regardless of that, I do think that rate cuts are actually appropriate. We have Fed officials, several of them saying that the tariff impacts seem to be much less impactful so far than what analysts and economists had forecasted, less inflationary. Right now, there's still the potential of inflationary, but perhaps we're seeing more likely a one-time price hike rather than this persistent inflationary problem that could come from tariffs. And so I look at this and I say, okay, so we have jobs data definitely weakening. And so we have Waller coming out, who, Lee, I think you mean dovish, because Waller's definitely usually more dovish. I think that's probably what you meant. But Waller, pretty dovish most of the time. But then we have sort of consensus still being like, okay, we should hold rates. But we're seeing that change. We're seeing things dramatically shift to being more of an even playing field, where we've got, Fed officials saying we should be cutting rates, and a little bit of a disagreement across some of the Fed officials. You do have Powell, who's like, we want to make sure inflation's done. But then you have other Fed members kind of being like, well, you know what? Labor statistics are slowing, etc. So let's look at this. Lee, you might be right about Bowman. I'm feeling, I can't remember. I get them mixed up, to be honest. I know Waller recently has been pretty dovish, but I don't know if they're usually hawkish. But good research definitely to do right there. Let's take a look at some stats here really quick, just on the U.S. economy, and ask ourselves: should we be cutting interest rates just based on the data? Right? If we're being data dependent, should we cut interest rates? And I do have a bias here, so prepare for bias. In the sense that I think the Fed should be data dependent like they claim they want to be. So when it comes to looking at the data as it's coming in, where are we at? Well, retail sales missed expectations. Actually, let's just start from the top. GDP growth is in the negative. It surprised slightly better than expected, but still it's in the negative. So we would call this a mix, right? It was better than expected, but still low GDP. PMIs missed expectations and were just pretty rough. Manufacturing and services both missed expectations, suggesting a bearish reading for the dollar because this would be indicative of rate cuts being more appropriate. Let's keep going. Retail sales missed expectations big time. Consumer slowed down a little bit more than people thought it would. That's definitely more in favor of rate cuts. The CPI report. What about this? Is this rate cut favored? Well, I would say yes, because we're at 2.4% inflation. And why is that a yes? Because the target's 2%. Why are we saying yes to 2.4? Well, it's because we've had 4 consecutive better than expected inflation reports. So the economists and forecasters for this stuff are thinking more inflation's coming, and they've consistently been wrong about that. And there's not been as much inflation. So we can say, okay, less inflation, that's good. And we're pretty close to the 2% target. And we'll come back to this because yes, 2.4% is not 2%, but check this out. The producer price index number at 2.6% came in as expected. The PCE number came in as expected. Let's keep going. Wage growth was strong, right? So 3.9% compared to forecast of 3.7. That's good. That's not as indicative of rate cuts. Let's keep going though. Unemployment rate, 4.2%. Still good. Not too much to worry about here. This would be more in favor of holding rates, in my view. What about jobless claims? Jobless claims are up to 245K. I don't think that's like super worrisome, but if you start getting up above 250K consistently, I think you're talking about rate cuts being appropriate. So we're pretty close to rate cuts being favored there. Jolt's job openings came in better than expected. That's more of a rate hold. ADP numbers, big old miss. Big miss. This is definitely in favor of rate cuts. Non-farm payroll, pretty neutral, but we would definitely still say this is holding up decently well. So let's say that's in favor of a hold if you're waiting for data to break. Then we can get into house price index, cooling off a little bit. Mortgage applications cooling off a little bit. More rate cut favorable. When we look at our collective, 36% of our indicators are looking better than expected, which is a very low reading. And in my opinion, this mostly suggests that rate cuts sooner than later would be appropriate because I'm sorry. I said Gunlock. Goldsby is what I meant to say. Gunlock is another big notorious Bond person, I think. Anyways, my thought here with this is that most of our indicators suggest that we have economic data that is cooling on the PMIs, retail sales, some job statistics. And so my thought is, do you really want to wait? Do you want to hold rates and risk holding them for too long when indicators are showing us that the economy is really cooling? How much longer do you want to hold rates at what is, in my opinion, and most, a lot of people's opinion, actually even Powell's opinion, a restrictive level, right? 4.5% interest rates in an environment where we're sitting at 2.4% inflation is restrictive. by the Fed's own kind of admission. So in my view, we don't have to cut to zero, but I think we should probably be cutting interest rates modestly at this time. So, and again, I don't think we should be cutting. I think if you ask Trump, he would say cut by 1 full percentage point. I would suggest, in my opinion, probably more like a 1/4 point, 3 times this year, like 1 in July and then 2 in the second part of the year. To me, that sounds like a reasonable rate cut plan. But of course, I'm just a YouTuber and I'm not a Fed official. But we are seeing several Fed officials kind of come forward and say something similar. Nick, employment data points to a slowdown. How can tariffs still be driving inflation? Are people really going to go into debt and pay 25 to 40% more for everything while unemployed? I totally agree with you. Yeah, I mean, we don't know. That's the thing with the tariff circumstance. There's just so many unknowns with that. It's not as easy as saying tariffs cause inflation, because yes, they pretty much, everybody sort of agrees they do cause inflation. But the question and the debate is, do tariffs cause inflation that is sort of like this, where it just causes price hikes and then nothing sort of persistent? Or is it more like this, where it spikes and then just kind of continues to cause prices to accelerate? That is where the difference is. And where I think actually what's interesting is Powell and several Fed members actually lean more towards this, meaning that the thought is that tariffs will cause some inflation, but it's not going to be this huge spiraling problem. And we're seeing consecutive CPI reports that are, sort of cooler than expected. So I lean more towards this by default as well, just because, again, in 2018, that was sort of the circumstance that we saw. The only difference being in 2018, we didn't have, above 2% inflation. I think we had like 1.7 or something. So anyways, to me, the general direction of rates is down, inflation is down, earnings are up. That tells me I want to stay long stocks. I want to be long indices. I want to buy dips, trail stops, etc. When it comes to gold, I may add gold in as a hedge. We have a nice little sell-off here taking place. I may get a long position going on gold today, sitting around 3,300 currently. Some of this cooling economic data to me suggests that gold could be a nice buy for my own trading, because again, I think we're getting some coolness in the dollar that could be strong for gold. So interestingly, the dollar and gold are both moving down today. This is a de-risking kind of day. We are seeing people kind of cheer what's happening. Hey, we've got some peace, etc. Potentially on the cards here. So we're seeing gold move lower, stocks move higher, in sort of celebration of, okay, we're not going to be fingers crossed, and for everybody's sake, I'll tell you this just to share with you guys something. I find it really difficult as a content creator during those sort of moments to navigate how to speak on these subjects that, they really move markets. I get put into this uncomfortable position of having to talk about things that are very difficult. And it does, it is hard at times. So I do appreciate the people that give me the grace, that give me the understanding of that circumstance. In fact, I was actually at a wedding this past weekend. This is just a quick story. And someone at the wedding actually watches my videos and actually praised me for my ability to discuss these topics as objective as I possibly can. It really, really made my day. So I'm definitely not perfect on it. I have my bias and opinions like everybody else. But I do appreciate the people who are understanding and give me that grace to have to talk about these very difficult topics that I, in other circumstances, would never talk about with people, except for when I'm on the internet on YouTube talking to everybody. That's when I have to talk about them. So I appreciate those who kind of are supportive through that really difficult year that we've had, in many ways. Why is gold going down despite attacks? Well, you have to think, if there is talks of ceasefires, we went from U.S. military bases getting shot at, and Iran, bombs dropping in Iran, like all these scary things, and Israel and Iran shooting stuff at each other, all these things to now potential ceasefire, etc. We'll see. But I think, the other thing that was so fascinating yesterday, the market was on display yesterday. It had how intelligent it was. So I took an oil trade. It did not work out. I stopped out on this oil trade. But the market trend, shot oil prices lower ahead of everything else. I mean, if you want second news, look no further than the markets. They're the best source of information out there, because people are placing bets milliseconds as fast as they possibly can on everything that's going on. And so yesterday you had this ordeal happening, and the market traded oil lower because Iran did not close the strait, right? So because they didn't close the strait, the market sniffed out that it was a symbolic retaliation rather than, and they also warned, I believe, officials that the strikes were coming ahead of time. The president mentioned that in one of his posts. And so the market sniffed out, oh yeah, things are getting better from here. And the market already had trended lower. That's how smart the market is. So if you ever want to be humbled, understanding how intelligent the market is that you're trading in should intimidate you a little bit. It should tell you the market figured that stuff out so quickly. No wonder trading is difficult. Smart people are behind the biggest moves. Like they figure stuff out, and it's amazing. NASDAQ up 1% here today. I think the biggest thing also, and maybe I misspoke on this. Lee points out that there was a ceasefire that has been broken already. So here's the thing, right? This can be very frustrating because people can be like, how the heck? And I don't know this. Can somebody confirm for us, like, what's the situation currently? Are things calming down, or etc.? Share with the crowd if you can. But the point is, as long as that strait remains open, the market, and this sounds insensitive, but it's true, the market doesn't really care what happens between the two fighting nations, as long as the disruption to oil prices doesn't take place. I know that sounds incredibly cold, but it's the truth. The stock market is going to say, as long as oil flow is not interrupted, those guys can have at it. It doesn't impact profits of major companies. I know that's really capitalistic society, cold-blooded, but it's the truth. And so if oil prices are shooting lower here this morning, it's because the strait has been left open, and it's unlikely, because China gets so much of their oil from Iran through that strait. It's unlikely that Iran's going to close it. And so the market's saying, oh yeah, so oil price supply is fine. Boom, down goes oil, right? So I'm saying that with hindsight now. I was wrong in my entry. I got stopped out. I took a small loss on oil, but it was a bit of a hedge in my portfolio in case things turned around or something changed. After the big drop off, I said, I'll take the risk to reward, and that didn't work out. So I took a loss on my oil trade. So I was wrong about that. Did not work out. Perfectly fine. I actually think I might take a second attempt on oil. That was weird. I can't copy and paste. Oh, there we go. Hold on. Something's going on with my trading view. So I might take a second attempt on oil prices if we do get a bigger pullback. This was a level that I actually think I'd take a little bit more of a size on than my first trade. If we get a pullback to this 64 level, and I've been bullish on oil anyways from a perspective of the demand side of oil. Like, I think that the economies of the world, if we start seeing more and more rate cuts and things sort of steady out with the whole tariff side of things, I actually think that oil prices on a dip, and specifically energy stocks. I may do that on my second YouTube channel. I may talk about some energy stocks that I'm watching right now. I think that could be really interesting. But if we do get some further decline in the price of oil, I may look to take some longs on USO, but also possibly trade some stocks. DAX is also firing higher here this morning. We got Russell making a push higher. I think the biggest trade that I'm in right now is still my Tesla position, which shot up 10% yesterday off of the robo-taxi announcement being really exciting to market participants. The Tesla team launched in Austin. They launched their robo-taxi ride sharing kind of stuff, and market really liked it. So the market was up 10% on Tesla yesterday, giving back a little bit of those gains here this morning. But I own the stock and was happy to see that kind of response. It is a very speculative position, but I do own some shares in Tesla. So we'll see how things go. Lano says Israel and Iran both shot missiles at each other. Trump was pissed, cussed at the reporters. Just another day. I do not mean to laugh at that as in the Israel and Iran stuff, but more so the Trump dynamic of just, there's always something, right? The man, I think one thing about Trump is the dude is just, he is entertaining, whether you like or dislike him. He is constantly sort of a source of, like, it's just the headlines just roll off the pen with Trump all the time. Bulent says CAD yen is looking really hot right now. Let's take a look at it. CAD yen, huh? Look at this. CAD yen pulling back into support. Bulent, I'd probably take this trade personally if I didn't already have CAD Swiss long. I just don't want to add too many CAD trades, but I do like that quite a bit. Looks really good. And I think CAD yen on the Edge Finder is like super high score. Yeah, +8. So looking really strong. Situation hasn't been updated since a few hours ago. Thanks, Lano. Trump's living the life. Man, I don't know, man. I don't know how that is such a hectic lifestyle to be. 1 second you're negotiating with countries all over Europe and Japan, and then next you're, intermediating between Pakistan and India, and then Israel and Iran, and oh my gosh, it's a quite the day-to-day experience. Let me see here. Gold sitting at 3,300 an ounce. Let me see where we're at with this. Gold getting a +6 score on the Edge Finder. Let me take a look at. So COT data looks strong for gold. That's been the case for quite some time. Yeah, I definitely don't. So here's the thing, right? I have quite a bit. I'll just tell you guys quickly about like my current positioning. In fact, I can show you because I have a trade tracker for this. This is available, by the way, to members. If you're a member and you don't have access to this, send us a message on our website, a1trading.com. If you're already a VIP member with us. So check this out. With the trade tracker, right, we can take a look at sort of my positioning. So if I just filter really quick for stocks, actually, let's just do stocks. So I have a huge list of stocks that I bought in all of the craziness in April. And so when we look at this, you can see I've got a whole bunch of trades that have just run, some of them have done really, really well. Some of them done okay. Some of them gone nowhere. But we've had a huge bounce back in stocks. So I've been looking at the markets and I'm saying, okay, I kind of want to hedge. I don't want to be, I think it's called a negative delta, where I'm net bearish overall in my portfolio, where I benefit from the markets going down. I don't want to be in that circumstance, but I do want to sort of hedge out a little bit of all of these gains that I've had. I also think that the market back at all-time highs, we could sit there for a little bit. So I've been selling some calls against stocks that I own. I also have long positions on two indices. I'm long the DAX and I'm long Russell. So I'm very heavy on the risk on side right now. And I do have some silver as a bit of a hedge, but I'd like to add gold and I'd like to add oil into the mix as hedges within the portfolio. Does that make sense? So we'll see. I do want to kind of hedge out my positioning a little bit. And so if I can catch some trades, like if I can get a pullback on gold here today, I mean, it's looking pretty good at these levels. I'll watch this. And if I take that trade, I'll notify it inside of our Discord. COT data. Yeah, let's take a look at it. So we did get the latest reported COT report. It was 1 day delayed due to the federal holiday that we saw last week. Let's take a look at the current positioning here. In terms of net positioning, we still have gold up towards the top, silver also up towards the top. In terms of the overall total holdings, gold, silver, these things have been phenomenal holds for institutions. If we take a look at gold here, take a look at this. Gold has had a high institutional percentage ownership for some time, right? What we can see is that institutions have mostly ridden this really good uptrend in gold the last few years with a very high exposure on the long side. So doesn't surprise me that they're still sitting in gold kind of long positions, silver as well. Japanese yen is also a bullish one, and US oil. These are Dow Jones, Nikkei, Euro. This is sort of your top end of the list. But let me just express that this is a little bit more longer term in nature, because when you look at the net positioning, this doesn't change very much week to week. It changes very minimally each week on an overall aggregate positioning level across institutions that report. So this is really good if you're like a longer term investor, but if you're a day trader or a swing trader, I actually think it's better to look at this secondary table that we've built here, which helps us to map out the change week to week in the institutional positioning that we just discussed. So the change week to week is more interesting. So what we can see here, I'm looking at it for the first time with you guys here now. We saw some institutional buying of oil. We saw buying the Canadian dollar, buying the New Zealand dollar, buying the Nikkei, buying the South African rand. On the sell side, they sold the dollar big time, big dollar selling, sold the S&P, sold the yen, sold the British pound, platinum, silver, Russell, Australian dollar, Swiss franc, and NASDAQ. So there's your weekly COT report. By the way, it's a good opportunity to mention that the Edge Finder this week is free to use for everyone who's watching this video right now or this live stream. So the Edge Finder is free right now until the end of the week. So if you would like to try it out, here's your chance to do so. We'll drop the link here in the chat right now to where you can sign up for that free weekly event. Use this link here. Use the Edge Finder for free for the week. All you got to do is fill out that form, put your email in there, and we'll send you the link to try out the Edge Finder until the end of the week. You can explore it. And this gives us a great opportunity to get some feedback from the community of people who, want to explore our stuff. Live keeps lagging. Is anybody lagging? Is there disconnection coming through on my side? Let me know if it's smooth or not. Nick, what do you think about longs on gold when we sweep 32.93? I like the bullish side of gold. I'm watching it close, and if I take a trade, I'll share it in the Discord today. Awesome, thanks. Cool. I'm also going to be watching oil prices today. So pullback in oil, further push lower. I like oil longs, which would pretty much be resetting all of this panic that we saw, completely coming back into tandem here. Let me just see if there's any headline news that I can share with the crowd. By the way, Canadian CPI this morning came in as expected at 1.7%. We did get a Fed official, Hammock, I hope I said that correctly, says, I don't see any imminent case to cut interest rates. So a bit more hawkish. Says that there is still some distance to go for sustained 2% inflation. Trump made a post this morning saying that China can now continue to purchase oil from Iran. That's exactly what the market wanted to hear, because again, that's the biggest disruption to the whole thing, is Iran not being able to sell oil to China due to closing the strait. That was the scary side of the market. And so that being taken off the table, Trump totally knows what he's doing when he says that. He's saying that issue is not happening and oil prices can remain tapered back, which is, again, the angle of the administration big time in all this, is to keep oil prices low, because the oil prices low mean inflation can stay low. Inflation staying low means the Fed can cut interest rates. The Fed cutting interest rates means we can better administer the national debt, which is a mission that I think every single person on planet Earth should want to happen. If it doesn't, you might say, well, that won't impact me. You may be surprised to figure out that if the national debt of the United States blows up, it is likely to be an incredibly painful thing for most of humanity. Because if the Fed doesn't cut interest rates and the national debt keeps ballooning higher at the rate that it's ballooning, and we never get taken care of, and again, up for debate on whether or not Trump and team are the ones to do it, but from just a perspective of hoping the best, let's hope that they can get something figured out. If we can get interest rates to come down, we could potentially administer the national debt a little bit better, which would be a positive thing. Right now, if the economy were to tank really quickly and we have this high national debt, or we were to go into war or some sort of thing, it would be devastating, not to just the US, but to the whole world. The whole world has huge loans given to the United States, like Japan and China and Europe. All these places have loaned tons of money to the United States. So it's going to ricochet effect and hit everybody if the national debt in the United States gets defaulted on. It's not something anyone should wish for unless you want to just see the world burn. So, and of course there are people like that. So, but that's the thing. I think interest rates going lower for the US likely means interest rates going lower for other places too. And that would be a net positive thing for the global economy too. Still buying oil if it's not on the edge finder? No, definitely would need to see oil prices coming down in tandem with oil on the edge finder getting a bullish rating. So I'll watch it. It's currently back to neutral, so I'm just going to wait. Nick, oil was a good buy, but your stop loss was too tight. Yeah, it definitely was. It was just my first attempt. If I get another attempt, I may take the second attempt on oil if we get some edge finder confirmation to go with it. But based on the neutral reading that we're getting on the edge finder right now, it's probably a no trade for me unless we get confirmation. Yeah, that's so true. I mean, that's the thing. I've talked about this a lot. I'm sure that if you have heard me rant about this topic before, you know that my opinion on it is something is broken with the way, government works, because everybody is just incentivized to spend money. It's the only way you get votes, right? Votes are the way you get votes is by, imagine if I told you to vote for me and I also told you by voting for me, you're going to get a pay cut. Nobody's going to vote for me, right? That's essentially what cutting the national debt means for a lot of people. Not for everybody. Obviously, a lot of people would just love to see the interest rates come down and national debt to go down. And I think it's a necessary evil. I think it's a necessary pain. But who's going to be the one to actually do it is the question, because it's not going to be very popular. And unlikely to get voted in is the person who is actually going to do it. So maybe it's Trump. Let's hope it's Trump. I don't know if it's Trump. That's my point. Silver's down. Look at that. I'm going to get stopped out on silver, which is totally fine. It was a small trade for me too there. But metal's moving lower here this morning. Oil's moving lower. So silver, I'm going to get stopped out. The DAX trade doing okay. Russell trade doing well. NZD JPY. I'm still in this one. This one's been really, really choppy recently. Look at Carnival Cruise Line up 9% today. Coinbase up 7%. Robinhood up 5%. Uber up 4.5%. Delta's up 3.7%. My goodness. Stocks jumping big time today. Have Jerome Powell speaking today? Yep. So he's in DC reporting before the House Financial Services Committee in Washington, D.C. And to be honest, I don't know that I'm going to watch it. I may just look at the headlines and cover it in my video today. Yeah, so that's happening in just a minute or so. I'm going to leave that. I'm going to let you know, if you guys want to go find that, go find it on YouTube. Before we go, let me just remind you, Edge Finder is completely free to use this week. If you haven't taken advantage of the free week, we'll drop the link here in the chat to where you can do that. You can watch it here. Thank you very much, Chandler and James. Thank you guys. Yeah, if you want to watch it, go for it. I'm just going to cover the headlines later just because I've got a bunch of stuff I got to knock out today. Appreciate everybody hanging out with me. Remember, take advantage of the Edge Finder free week. Comment in the videos, comment on the, or send us an email, send us messages on your feedback for the tool. It does really help just to give us a little bit of feedback on how we can continuously improve the tool for our users. Thank you guys very much for watching and have a great rest of your day. See you next time.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.